Hey, welcome back. Joe Anderson here. You're watching Your Money, Your Wealth. Happy Saturday morning, everyone. Hopefully you're enjoying the show. We're having a great time talking about money in retirement and some of the things that you need to do to get on track. The best time to start is to start right now. Here's something that can help you. A lot of times people don't want to go and sit down with a broker, an insurance agent, a certified financial planner, whatever the case may be. Maybe you want to do this stuff on your own. Well, great. Here's an opportunity. If you would like to go to a retirement planning course, I teach a retirement planning course, ironically, all over Southern California. All you have to do is go to the website, yourmoneyyourwealth.com, and you can check out a local community college or school near you and attend. We still have a few more classes until the end of the year, or we start right back up again in January. If you want to take advantage of it, it's free of charge. We will pick up the tuition. It's usually anywhere from 40 to 70 bucks, but we are very dedicated to educating you to make sure that you make the best moves out of your money. We want to answer your questions. So we're out on the street. We have more questions, so let's answer this one.
Hi, Al and Joe. If my husband and I file our taxes separate, can we put more into our retirement fund?
That's a great question. So
it is, and I'll take that one because she addressed me first. So the answer, the answer
you go,
is,
boy.
I know. The answer is no. Whether you file jointly or separately, it doesn't make any difference.
It actually can hurt you too.
Yeah, it can. But the question was, can I put more in? The answer is no. In some cases, less. Like a Roth contribution, there's lower income limitations to where you can't actually get that much in. So no, filing jointly or separately makes no difference in how much you can contribute to your own retirement plan.
Hey, Alan, so let me ask you this. Why would someone want to file separately? Because if you look at a Roth IRA contribution, the IRS doesn't really care for you filing separately, because if you make more than $10,000, you can't contribute to a Roth. So that's telling me that the IRS is saying, hey, why would someone want to even file separately?
Well,
because I think there's a lot of misnomers. Hey, if we file separately, we're going to pay less tax.
It's a good question, and we get that all the time. If I file separately, am I going to pay less tax? And the answer is almost always no. And the reason is because we live in a community property state. California is a community property state, and by definition, half of my salary is my spouse's, half of my spouse's salaries is mine. And so if we file two separate returns, they mirror each other. And the tax rates are actually higher for filing separate when you put those two together. Now there's one exception, and that is if you have assets before marriage that are generating a lot of income. You might look at that as long as they're separate non-community assets. But that's about the only time. In almost all cases, you're better off filing joint.
Hey, I'm going to ask you this because I think people are probably thinking about this too. Let's say I'm married. Would it make sense for me not to be married? Is that going to save me any money in tax? Filing a single return, let's say both my spouse and I, we get a divorce, we're still together, and we file separate returns. So is there a marriage penalty now with the overall tax code if I am married? Am I going to pay more tax? Is it costing me even more, let alone heartache and pain, but now even more tax money if I continue to be married?
Yeah. Are you asking for yourself?
I am single, my friend, and that is a very
okay.
good. That is why.
Just wondering. Okay. So the answer is it depends. It depends on what? Your income level. So let's say one spouse works and the other spouse doesn't work. Well, you're actually going to pay less taxes filing married because they're the same tax brackets, 10% tax, 15%, 25%, and so on. But when you're married, you hit those upper brackets later on. So you actually do better. Now, if you're both working and making somewhat similar income, you're probably worse off getting married, but again, it still depends upon your income level. So even though in the lower income levels, the marriage penalty, the so-called marriage penalty is gone, it happens when you're making 80, 100,000, 120,000 and above. The both of you, almost definitely, you're going to pay a little bit more filing married. So we do get that question, well, should I just go to Vegas and get divorced on the 31st and then married on January 1st? Well, you can if you want to. That actually does work. Because
hopefully love and harmony is worth more than a few dollars in tax.
Yeah, because it's your status on December 31st. But yeah, is it going to be beneficial to your marriage? Probably not, is my suggestion.
All right, well, let's go to the email bag because we're answering questions here. Let's go to the email bag. Al?
All right, here we go. I am 52 years old and I have no retirement savings at all. I know I'm way behind and I don't know how to get started. What would you suggest? This is Richard in La Mesa. And I got to say, Richard, thank you for asking that question, because a lot of people don't want to ask that question, and it's a very important one. So I've got a slide here that I kind of want to go through to tell you exactly what to do, and I'm going to make it a little bit more generic. I want to start with a 55-year-old and a 60-year-old. Now, you're only 52, so all the better for you. But here's the key. Start now. Start today. Cut your spending as soon as possible, because if you don't, you're going to go over a cliff. By the time you hit retirement, your spending is going to be a lot lower. When you cut the spending, try to maximize your 401k account. If you're over 50, it's $2,000 per month. The employer match, take advantage of that. Commonly, that's 4%. And if you retire at 67 instead of 65 at a 7% rate of return, let's look at that. Age 55, you end up with $500,000+ at retirement. Age 60, it's still $250,000. Now, $250,000, you're not going to live like a king and queen, but you're ahead of the game. You're ahead of most other people. So if you're 60 with no savings at all, get started today. There's still hope for you. And in some cases, if you're 60, maybe you want to work till 70, 72, you still end up with that $500,000. Right?
I guess the point is you got to start right now, and if you start at 55 versus age 60, you're going to have a lot more money. $250,000 is still no chump change, right? So you can still generate some income there, then you have Social Security and so on. But if you're behind the 8 ball, you probably want to work as long as you can, push that thing out, and save as much as you can, because the compound interest is pretty powerful. Let's answer one more email question and get the heck out of here, Al.
Okay, my parents are giving me $14,000 a year. This will be a gift. How much do I need to pay in taxes on the gift? This is Brian, Pacific Beach. Well, the quick answer is nothing. A gift is tax-free to you. So fortunately, there's no tax to pay at all. So that $14,000 you got, Brian, you get to spend it how you want.
All right. Well, Al, I mean, you're the smartest man in the room right now.
Well,
you are the smartest man on TV.
Out of two of us?
On Channel 4 at 11:29
well, I'm in the top two anyway.
You are definitely in the top two. Hey, thanks so much for joining us. Hopefully you learned something. Here's I guess, the end-all be-all. It's never too late to start. Start right now. Start saving as much as you can, and then watch that money grow. Don't necessarily get caught up in the gyrations. Just start saving money, and then look at it in 15 years. You're going to be a happier person. Join us, 888-994-6257. Call that number right now. Get in for a free retirement review. I'm telling you, it can change your life. For Big Al Clopine, I'm Joe Anderson. You just watched Your Money, Your Wealth. Have a wonderful, wonderful weekend.